Hello, traders. It's Sunday evening, September 17th. Market looks like it's going to open just a little bit higher. Overnight futures not doing much of anything. I'm going to be recording in the Option Stalker Pro light theme. A lot of you have said that you can see the videos better on YouTube when I use the light theme, so we're going to give that a shot. You can tell me your reaction after the video in the comments section. AEO was a short that I highlighted in each one of these videos. I start off with a review of the previous pick. I want you to see how well this systematic trading approach works. Once we've reviewed those picks, we're going to do some market analysis. We'll get our bearings, and then I'm going to find a new pick. So AEO, decent pick. We are simply day trading right now. We'll get into that later. The market dictates what we're able to do. So if we go into the 15-minute chart, I recorded that video on Wednesday. It was released before the open. And here you can see long red candle to start the day. And then the stock really sells off hard. Well, we liked it as a short on a D1 chart. The stock did bounce with a big market rally on Thursday. Friday, it was able to hold its own. Now, Friday, we actually had quite a bit of market selling. We'll get into that in just a second. But overall, there was a nice opportunity to make some day trading profits on AEO. Not something that you want to swing trade right now. We're keeping our swing trades very limited. Amazon was the long that I featured before the open on Wednesday. And here you can see that's the opening price on Wednesday. Stock rallied up, very nice. And then it pushed higher in a strong market on Thursday. So, yes, there were some profits to be made on Amazon. I don't think I took a look at the AEO daily chart. So let's go back to that one first. And we're going to take a look at what told us that AEO was weak on a D1 chart. Here's what I liked. I like the fact that we had this little compression right in here with a nice little breakout. Okay, this is all pre-earnings rally, so expecting a good number. There's your earnings announcement after the close. This is the first day that the stock trades after that earnings announcement. Long red candle off of a relative high, bearish engulfing candle. Okay, that has my attention. Next, we have a long red key bar. So heavy selling, big volume. All right, so they don't like that earnings number, and we can see that the stock trends very nicely. Downtrend, uptrend. This looks like it could be a trend reversal of this uptrend, and now we're seeing additional red candles in here. So once this breakout here fails, anyone that bought in here is going to get flushed out, and that's going to create more selling pressure on the back end. We also had a number of other retailers who were starting to show some weakness. So everything was looking like this stock was going to continue to pull back. Take a look at Amazon and why we like that on a D1 basis. That stock was breaking through this downward sloping trend line right here. Nice, long, green candle. The stock is choppy, moves higher, but a nice, consistent move higher and excellent relative strength relative to the overall market. It was also above its AVWAP-E, which is good. That's AVWAP anchored to the earnings release date. So yes, the stock had good volume and nice relative strength. Let's put up the real relative strength indicator. We recently renamed this. This matches the real day trading calculation for real relative strength. And there we can see blue line above zero, really, really nice relative strength. So when the market was waffling around, this stock was pushing higher and making a new relative high. That's why we liked Amazon. That's why it's set up well for us on that daily basis. So yeah, there was some decent profits to be made there. You can see the volume was excellent also, and it was excellent right in here. You can see that in the chart. You can also pick up on that relative strength. And the stock also had a positive LRSI cross above 20 here. So we had lots of good things happening Wednesday morning. So let's take a look at the market. That's presenting us with a bit of a problem. We had a lot of news come out this week. We need a market driver. That's the most important thing right now because the market is not going anywhere. It's just chopping around. And here we can see this is the AVWAP anchored to the last triple witch. And you can see how the market has been above it and below it, above it, and now it's just sitting right on that same level. But notice the choppy back and forth. Long red candles. Hey, here we go. This looks like we're getting something going. Not so fast. Then we get this big bounce. Okay, well, now we erase that and we have a downward sloping trend line. This looks pretty good. This long red candle looks pretty good because we have a chance to really break down and perhaps get down to that 100-day moving average. The blue line that you see here is the purple line is the 50-day moving average. So we've also breached that pretty convincingly, but nothing going. Now we have a double higher low. We get a little bit of a release. All right, well, now this looks pretty good because we're breaking through this downward sloping trend line. But that fizzles out, and we're just back and forth in the same trading range. There's not been a lot that's happened in the market since June. Look, we're right where we were at the beginning of June. So we've just spent the last 3 months muddling around, looking for some direction, and everything starts looking good again. This is the price action that we had on Thursday. Hey, here we go. There's another trend line that's been breached to the upside, closes on the high. Decent volume coming in here. Now, when we're looking at the volume, it's a little bit deceiving right now because we have triple witching. That means that large institutions are going to be rolling their positions, their September positions, into December because the futures contracts are going to be expiring. And that has a tendency. We also have index rebalancing. We have end of quarter window dressing that's going to be taking place. That inflates the volume. So even though the volume looks pretty good, it's a bit deceptive because of all of these rolls that are taking place. So keeping that in mind, on Thursday we had an absolutely gorgeous rally. So let's go back and take a look at that price action. We had this big gap up. We pull back. Market tests the gap, but it holds the vast majority of it, and it holds the prior day's high. Okay, this is looking pretty good. Nothing to write home about because we've got mixed overlapping candles in here. We have this nice long green candle and then a bearish engulf. Oh, gee, that's nasty. I see that and I start thinking maybe we're going to fill in more of the gap. But I'm still not really doing anything in here. And the market's telling me not to do anything because it's been chopping all over the place. Long wicks, long tails, mixed candles. There's really nothing to trade in here. So now we get this nice bullish engulfing candle off of the low. Still nothing that great to write home about. I mean, the fact that the gap is preserved is okay. We got through resistance. That's good. Still nothing that great. Okay, now we start getting through the high of the day with some conviction, but still tiny little bodied candles, and then we instantly retrace in here. So this ends up being a nice bullish flag. Once we recover from this and stay above the AVWAP, then the market starts to grind higher. This is all program driven. This is all fluffy. There's no real substance behind it. There wasn't any news behind it. This week we had the CPI and the PPI come out. Both numbers were hotter than the Fed would like. The problem with the CPI is that the core inflation was high. Well, that's exactly what the Fed has been monitoring, and that's where they want to see some improvement. Well, they didn't get it. PPI was also hot. Energy prices are definitely having an impact. We had the ECB rate decision came out Thursday. They raised a quarter of a point. Now, the initial reaction on Thursday was this gap up. And The street was basically operating under the premise that the ECB is one and done. What the ECB actually said was, we see that a pause is very likely here if inflation does not go up. But if it starts creeping higher, yeah, we're going to keep raising rates. Well, the market listened to the one and done part of that. And once these programs, these roles, as I explained earlier, start to take, they start to get traction and there's some directional momentum, well, then they kind of feed off of each other. And then you get these programs that drive the market higher. So a lot of it is just fluff. It's program driven. And if you kind of recognize that, then you kept your trades very short term. You stuck with day trading. You didn't do any swing trades because the market's not really giving anything for you to swing trade off of. And it looked good. You know, the market finished near its high, but lots of mixed overlapping candles. There's just no real strength here. What we want to see is nice consecutive stacked green candles or red candles. So we come in Friday, blam, whoa, where did that come from? And the S&P futures were indicated to open relatively flat on Friday. Really wasn't any big overnight news to justify a drop like this. Market gaps down, and then we start seeing a lot of mixed candles again, and then we get three really decent candles in here, some follow through, and now all of a sudden we're starting to retrace all of those gains that we had on Thursday. Were given back very quickly, and we even take out the low from Wednesday very late in the day. But look at this: red, green, red, green, just mixed overlapping candles, chopping all over the place. We've got to stick with day trading right now, folks. There's just nothing for us to really swing trade. So we're going to find a long, we're going to find a short, and we're just going to focus on these stocks, and we're going to try and find some opportunities intraday. I don't see the market doing a whole lot of anything this week. We don't have a lot of smaller economic releases, but we've got one giant release, and that's the FOMC rate decision on Wednesday. So what might we expect this week? Well, Monday and Tuesday are going to be relatively quiet. Why? Because we're seeing back and forth choppy price action. All the gains that we had on Thursday were stripped away Friday and then some. And the market has been able to hold this AVWAP-Q line for now. It's been able to hold or stay near that 50-day moving average, but it actually closed below it. We do have a nice upward sloping trend line, so we're going to zoom out and see where that comes into play. And that is actually a very significant trend line. So I would pay attention to that trend line. And you can see here on the S&P 500, it comes into play probably at about 44.30 approximately. So if the AVWAP-Q fails, and that's at about 44.90, then we've got a chance to go down and test this upward sloping trend line. Let's put up the SPY. It's a little bit different look because SPY did pay a dividend on Friday. So you got even more of a long red candle here. You can see how it closed clearly below the AVWAP-Q and the 50-day moving average. And it also has a very significant upward sloping trend line that also comes into play at roughly that same level. So if it takes this out, it's going to have a path to a 100-day moving average. Is it likely? I really don't know because we have another downward sloping trend line here, and we have a wedge forming. So one way or the other, we should get a breakout or a breakdown here. And if we break out through this downward sloping trend line, we'll test the highs. I believe this is less likely simply because we are in September, which has historically been a weak month. We also have this upward sloping trend line here. We break that, we test the 100-day moving average. So a very plausible scenario might be, okay, we got a couple more weeks of weakness. Market takes out this upward sloping trend line, tests the 100-day moving average, bounces off of it, and then maybe they try and get something going into the end of the year. But buyers and sellers are balanced because there are opposing pieces of information. Is the Fed going to stop raising rates in 2023? Well, right now there's a 93% chance that they pause this week. Everyone's going to be scrutinizing the language. There's about a 50% chance that they pause in November. So we've got a nice long time before the Fed meets again. There's a 50% chance that they pause in December. You can look at that two different ways. You can say there's a 50% chance that they raise a quarter point this year, or 50% chance that they don't raise this year. Economic conditions, if they start to slip, if they start to falter, I think that's where the market gets more concerned, because everyone will start thinking, wow, did the Fed go too far? Did they wait too long before they stopped tightening? Now, we've got China has actually been easing, and they've actually been adding liquidity to their market. Their economic numbers were a little bit higher last month, but in general, China has been struggling. So not a lot of strength coming from there. Europe, 0.5% GDP growth. They're not doing so great. ECB, are they going to pause? Kind of looks like it. They're saying so, but it's all based on what inflation's doing. In our last readings that we had on inflation, they weren't that good this week. So we're in this conundrum. We're in this back and forth. Everybody is waiting for things to pan out one way or the other. So for right now, I would stick with day trading. I would watch these key levels. If you get a breakdown below this upward sloping trend line, we're going to have an easy path down to the 100-day moving average. And then maybe you can take a couple of overnight swings. Not something you're going to swing for 2 or 3 weeks, for crying out loud. Just a little bit of follow through and momentum. That's all we've got right now, because we can see that the price action is just back and forth for 3 months. We haven't gone anywhere. So Monday and Tuesday, we're probably not going to go anywhere. And in fact, Tuesday, we start getting into dead till the Fed mode. Same thing with Wednesday. The market's not going anywhere. It's kind of sitting at the same level. Well, traders are not going to place any big bets ahead of the FOMC statement. Then once they are able to see that statement, see where all the officials are, then maybe we get a move after that release. But before that, probably not. So that means that when we pick stocks, we have to find groups and sectors that are particularly strong. And we have to find stocks that can do all of the heavy lifting. That means that they need to have nice, clean, big breakouts through technical resistance level to the upside. They need to have that relative strength. They need to have that volume, because they're going to have to do all the work. And that's what sets us up for nice day trading opportunities. On the downside, you're looking for those big crackdowns through major upward sloping trend lines like this, with long red candles, heavy volume, and we want to see relative weakness going into those numbers, or into those support levels. So let's take a look and see what we've got. I did create a search, so let's take a look at that. And I'm going to pop up the custom search window, and I'm going to show you the criteria that I used and why I used it. So I'm looking for a bullish trade signal. Our buy and sell signals are longer term, meaning that the stock has had to put in a nice base. It's had to move in off of the lower quartile. It's got some momentum. Typically, these stocks are going to be above the major moving averages, but the stock has been trending higher. It has real relative strength on a 2-hour, 4-hour, and daily basis. It has an HA continuation, and I'm going to explain that. This is a new variable that we added. So it's bullish on a daily basis. LRSI is also bullish on a daily basis, so we want that to be above 20. We always want to have nice option liquidity. We'd prefer to trade options if we can. And the relative volume on Friday was heavy. So these are all really nice bullish influences, bullish characteristics to have. And when we look at this list, we've got about 12 stocks or so. And so I'm going to move this off screen so that you can see the stocks as they come up. And I'm going to click through the list. I like the top stock on the list. And we could take a look at a couple of the others, but this is going to be your bullish pick. Here's why I like it. You can see here that we have a downward sloping trend line that comes into play right in here. And let's see if that gets picked up on we've got a breakout, a resistance level here. Tried to break out, but that resistance held. But there is another trend line that comes in to play right here. You can see it visually. We're able to get above that. It's also above the major moving averages. It's also had nice volume. There's your real relative strength right there. You can see LRSI pops above 20. It's even above 80 right now. So there's the 200-day moving average, the blue line. You can see how it had a earnings reaction before the open here. Nice big reaction. They liked the number. Well, the stock has been able to hold its own, and now it's getting back above that AVWAP-E, above the 200-day moving average, and it's challenging this horizontal resistance. So what would I like to see out of a stock like this? When is it that I would want to buy this stock? I want to mention one other thing. There's your day Thursday. We know that Thursday was a very bullish day, so the stock did well. It rallied nicely on Thursday. What did it do on Friday when we had that market meltdown? Right here, that long red candle on a daily basis. What did this stock do on Friday? It was able to hold this gap up and that open for that nice long green candle. That is relative strength. So let's take a look at the 5-minute chart and you'll be able to see, okay, well, this doesn't look so great. What do you mean that's strong, Pete? Look at that stock. It made a new low of the day in the last hour. It doesn't look too good to me. Well, if you put it in the context of what it did relative to the overall market, you can see there's the gap up on Thursday, and it was able to hold that same price level when the market pulled back. So there's your rally Thursday. You can see how the market dropped dramatically on Friday. Well, this stock is still treading water at that same level. So yeah, ABBV, a little bit of a choppy stock. Here's what I would want to see. I'd want to see the market put in a nice rally. I want to see the SPY get back above that AVWAP-Q. I'd like to see it get back above the open from Friday. If it can do that, that purple line right there is the 50-day moving average. So I would like to see it, excuse me, that's the EMA 8. This gray line is the 50-day moving average, but they both come into play right at the opening price from Friday. So if the market can get back above that opening price, then I'd like to have an alert right there, and the market conditions have been met, and then I would like to see the stock challenge that high from Friday. So I'd like to set a GTC alert right there on that high, and it's set right now. There are a couple of different ways we can set price alerts. I just did it. I did a horizontal alert using that GTC, and I can also right click, create alert, use the drop down. I can use price. I can use a major moving average if I'd like to. And so I'm going to use price, and let me determine that price. That high was 154.69, so we're going to set it at 154.70. Stock closes above 154.70. I don't really care if it trades above that. I want it to close above that, and I want it to do that and get above that level and close above that level. And I like to see the market above that 50-day moving average. Then this stock has a nice clean path higher. It tends to be a little bit choppy too, just like the market. It had a nice move off of this support level right here, but since then it's been consolidating. So it's going to need a little bit of help from the market. So let's go in and take a look at a couple of the other stocks that are in the list so that we can distinguish why maybe ABV looks better than the others, or maybe we find something else that we like even better. So we'll take a look at APLS, and I'm going to move this so we can see it. Not bad. Big sell-off here. Earnings there. Initial bad reaction, but it's been able to really recover a lot of this loss. But still, that news is going to weigh heavy on the stock, and there is a chance for the stock to drop. So it would not be one of my favorites. This is nice and strong APO, Apollo Global Management, nice breakout. This is a really nice looking stock. It doesn't go anywhere fast, but this is a grinder. I do actually like that stock. BX, take a look at that. Nice rally here, compressing, holding the gains when the market's been chopping around. This is not bad. Any kind of little pullback in here would probably be an entry point as well. So not bad. CCJ, that stock is super hot. I don't want to chase anything right now with the market chopping around, but on a pullback, this stock would actually be a pretty decent play. Maybe CCJ is the one. But what I want here is I want to see a nice little pullback. And maybe I'll use LRSI and I'll take a look at where those LRSI values are because it pulled back on Friday with the market. And now we're seeing that LRSI is below 20 on a 30-minute basis. So this is going to set up pretty well. Here's what I'm going to do. This is going to be your pick of the day. I'm going to create an alert. I'm going to go in and I'm going to set LRSI up for a move above 20. And right now it is below 20. So LRSI M30 has to be above 20. And I'm going to save that alert. So now what I want to see is this LRSI 20 might take a while, excuse me, the LRSI on a 30-minute basis might take a while for it to poke back above 20. Now, what I'd like to see is that when the market is weak, I'd like to see the stock preserve its relative strength. I don't want to see long red candles because then that tells me that sellers are definitely knocking the stock down and there's profit taking place. What I'd like to see is for that LRSI cross and for the stock to be basing while the market is flopping around, testing the downside, chopping around. And then when I get that cross back above 20, that will be a nice entry point for me on that stock and it can continue that rally. So ideally, it gets a little bit closer to this EMA 8 and is able to hold this $38 price point. I think that will provide us with a nice entry point. So let's take a look at a bearish pick. Again, this is how I found this stock. I didn't mention these continuations. I did talk about LRSI. So let's also put up on a daily chart the HA candles. And so what we're looking for specifically on these continuations is in the last 2 days, because I'm using HA continuation new, HA continuation new, it has to have had a flat bottom candle in the last 2 days, and it has. Actually, you can see it's had a couple of them. So this is nice as opposed to a reversal. Now, for a reversal, let's say a bullish reversal, what we would need is a flat top red, then we would need a flat bottom green, which we get right there. That would be a bullish reversal. And you can also set alerts on HA reversals, and you can do so on a 5-minute basis. So very nice tool for us to use for day trading. So let's take a look and see if we can find a bearish pick, and then we'll call it a night. And I'm going to go into, well, I'm already in one of my favorite searches here. In fact, I took a quick look before I recorded the video. I went into Red Royal Flush and I went into Pop Bear. I'm going to go back into normal candlestick charts. And I didn't have to go far into Pop Bear. This search is looking for breakdowns through support. And we'll zoom out just a little bit so we can see what the general price action of these stocks has been. LRCX, you can see long red candle closing on its low below the 100-day moving average. That's not too bad. Let's put up the trend lines and see what comes into play here. These are automated trend lines. We can see that we've got one here that was breached. We've got another one here that was breached. We have a double top lower high, downward sloping trend line. Now, this is a pretty nice breakdown with lots of room to get down to that 100-day moving average. Relative weakness also right here. I should change that for this lighter color. Let's go maybe orange. We'll try that. There we go. So now we can see that it's weak relative to the market. This could be nice. It could find support at the 100-day moving average. So just because it closed below it on Friday doesn't mean that it's going to continue to close below it. We need the market to continue to come down and test this upward sloping trend line. Comes into play around the 442 level. So we want to see that cracked with a nice long red candle. If we get that, then yeah, this would be certainly a stock that we want to take a look at. KLAC, upward sloping trend line breached right here, 100-day moving average, another semiconductor equipment manufacturer. And then we get into, this is just a nasty looking pattern right in here. When I see a long red candle like that through multiple support levels, you can see how the earnings reaction was negative. There's your AVWAP-E. You can see how the stock never could get above that, and then it breaks down hard on Friday with massive volume. So let's zoom out a little bit and see where that trend line comes into play. That is a longer term low plus trend line, a low minus trend line. It's a big breakdown. This stock is going to have a very difficult time recovering. There was some type of surprise. I don't know what it was. I'm sure there's probably news on it. Read the report, check out what the news was. But when I see price action like this, and it's not earnings related, it tells me there's a surprise, there's a news event that happened. Very, very weak. So what I'd be looking for is with the market kind of chopping around, I want half of this long red candle preserved. So I don't want to see any big knee-jerk reaction bounces in here. Because if I see that, it's going to tell me that this is a huge overreaction. If it retraces half of this long red candle, I'm still fine with that. And so let's zoom in a little bit to see where we might want to set our target. I would say if it can preserve, it fell from 60 down to 50. So that is a $10 move. Don't even want it to recover to $55. I'm thinking somewhere in the maybe 52, 50, 53 level. If it can bounce up to that level and then still find resistance and then continue to come down and test that low with any kind of market crackdown, you're going to have a good opportunity because there are sellers. This tells me that there were very many sellers on Friday with that big drop like that. And now the stock closing on its low, so it had some follow through. So those sellers are going to be back. You can see the volume is extreme. So here's how we approach something like that. And you can see that on a 5-minute basis, the stock is relatively weak. LRSI is below 20. We can use LRSI again. Let's see where it is on a 30-minute basis. It's buried. It is absolutely buried. So it would have to go above 80, and then it would have to drop back below 80, and then I would get a alert. So let's set that again, M30 basis. Why did I choose a 30-minute period? 30 minutes is going to be more resilient than a 5-minute or a 15-minute, and I sense that there could be a little bounce coming in this stock. Any bounce is going to get that LRSI moving, and you can see how it's been above and below and above and below. So I want to make sure that on a 30-minute basis, I'd like to see what this stock can do in terms of a bounce. So I'm going to create an alert, and I'd like to see LRSI on a 30-minute basis, and I would like to see it below 80. Well, wait a minute, Pete. It's already below 80. It's below 20 even. Right. Well, the system knows that it has to go above 80 and then cross below 80 for that alert to trigger. And I'm going to add that. I'm going to save it. And so now here's the grand scheme of what I'm looking for in this particular pick. I'd like to see some market weakness. I'd like to see this upward sloping trend line taken out with a nice long red candle. Maybe it happens Monday, Tuesday, Wednesday, maybe after the FOMC on Thursday. Whenever it happens, I don't care. I want to have that market breakdown because then I've got a tailwind for my short position. And with this particular stock, if the market's going to be muddling around, perhaps it has a chance to recover some of this big loss on Friday. Well, when we get that LRSI cross and then it comes back below 80, I want to see this resistance level preserved. I want to see it stay below, let's say, that 53 level. If I get that, it tells me that the sellers are still engaged and they want to sell that stock. There is no bounce. They're keeping that resistance in place. And as soon as I get a little help from the market, blam, the stock has another leg lower and I have a nice entry point on a short position. Sorry that the video took a little bit longer. I hope you like the light version. If you like the dark, please give that comment a thumbs up. If you like the light, please let me know. I'm trying to figure out what works best for these YouTube video presentations. We've just added a lot of new features to Option Stalker. I'm going to show you some of the different variables that we have. We've got new high of the day, new low of the day, 3/8 EMA crossovers. We have above or below the prior day's low, Haken-Ashey reversals, above and below VWAP. So lots of new variables. We're going to keep adding. We're going to continue to add new variables to all of the custom columns that you can set up and all the alerts that you can use. And you can also combine all of these variables with lots of different combinations so that it has to have this, 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 and this, check boxes as we like to call them. And if those conditions are true, you're going to get an alert on that particular stock. Again, thanks so much for watching. Please leave your comments. We will see you Wednesday.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.